Matt and Rita own a number of investments, such as stock, real estate, and a thriving business. As they near retirement, Matt and Rita want to sell off some of their assets to simplify their lives and travel. The one thing holding Matt and Rita back from selling off their assets, however, is Uncle Sam, who's ready to collect a significant amount in capital gains taxes. Thankfully, they contact their real estate agent, who sets up a meeting with the helpful pros at defertax.com. During the meeting, they learn that they can defer the tax on the sale of these assets, investing in something called opportunity funds, a tax deferral option made available through the Tax Cuts and Jobs Act of 2017. These funds allow Matt and Rita to invest their capital gains into over 8,700 economically distressed opportunity zones around the United States. Opportunity zones are distressed communities that typically have aging real estate, high unemployment rate, and low median household income. Oftentimes, these locations are right next to areas where the opposite is true, making opportunity funds that invest in those areas attractive to investors. By moving their recently realized capital gains into funds that invest in real estate, development projects, or companies based in these opportunity zones, investors like Matt and Rita will realize two benefits. First, they will have the opportunity to greatly improve the real estate and value in the community while helping to provide better education and jobs for the local population. Second, the government incentivizes investment dollars coming into opportunity zones by giving Matt and Rita the opportunity to defer the tax on the sale of their assets, slowly erasing the tax obligations on a portion of their gains, and giving them the benefit of having those proceeds grow tax-free. Matt and Rita get the tax benefits, and the community gets a much-needed injection of investment dollars. Here's what it looks like to the investor. Matt and Rita have a paid-off investment property valued at $1.5 million. The current cost basis is $500,000. Since cost basis is exempt from capital gains, they're able to pocket the $500,000 tax-free upon sale and use it for other investment opportunities or retirement. Under current law, they have 180 days from the sale to invest the remaining $1 million into an opportunity fund. If they do so, they'll get multiple benefits. First, they get to defer the tax until 2026, where it will be due and payable April of 2027. Second, if the client holds the money in the opportunity funds for 5 years, they get a 10% step up in basis, which means they reduce their capital gain by $100,000. If they hold it for 7 years, they get another 5%, further reducing their capital gain by $50,000. Instead of owing taxes on $1 million, they now only owe taxes on $850,000. Lastly, if they hold the investment for 10 years or more, any gains in value above the initial $1 million investment come out tax-free. This tax deferral option looks extremely attractive to Matt and Rita, as it not only allows them to defer the tax on the sale of their asset, minimize their capital gains tax liability, and potentially make a very valuable investment, but it also allows them to make a difference in communities across the United States, perhaps even ones that are local to them. This is a brief explanation of this tax deferral option. There are, however, other things to consider.
Hi, I'm Michael Wallace. I'm CEO and founder of Wallace Investments. We specialize in implementation of tax strategies to save money on your taxes every year. Probably have more tax strategies than anyone else. We have a specialized program where we can actually prepare your tax return and implement our specialized tax strategies free of charge. If you're interested, see my contact information. Thank you.